When you look at Zambia's population, you realize the vast potential and wealth this country has. In 1964, Zambia's population stood at 3.4 million, and now we are close to 20 million people. There will always be need for accommodation and housing, and that's why if you are creative, as I hope to be this year, you can take advantage of the real estate investment sector in Zambia and actually beat inflation by investing in property. And this is what this video is about today. So I'm going to take a look at how you can invest in real estate the right way so that you can have cash flowing from your investment from the first day of your investment. Let's get started. Hello there and welcome to the second episode of Investing Facts. I'm Mukonki Mukonkela, the host of the Thera Math Insights business show, where we turn your challenges into actionable insights. Today I want us to look at investing in real estate. Real estate investing involves buying a property for a price which is below the market value, adding value to that property and selling it or renting it out. So the ultimate goal in real estate investing is to ensure that you have cash flowing from that property immediately you make that investment, and also to enjoy the capital growth as a result of appreciation in the value of that property that you are going to buy. Why is real estate a good investment compared to other investments such as starting a business or the stock market? The first reason is really simple. People will always need a place to live in. The national housing deficit of Zambia in 2017 stood at 2.8 million, and in that same year Zambia had a housing stock of 2.5 million. There is a lot of demand for accommodation and housing, whereas the supply is very little. So you know that where there's demand, there's profitability because people are looking for that commodity or item, and in this case people are always searching for accommodation and housing which is affordable, so it makes real estate investing a good investment opportunity that you could consider. The second reason is that real estate is really a cash liquid investment. A key benefit of real estate investment is its ability to generate cash flow immediately you make an investment in a property that you are interested in. The cash flow comes from the rental rates or rental fees that you charge, or the profit that you make by selling that property for a price which is above the cost that you had incurred in purchasing that property. Another advantage of real estate investment is that it can beat inflation. As the prices of goods and services rise in a market, you can also transfer that increase, which is as a result of inflation, to your tenants, and thereby you are protecting yourself or hedging yourself against the effects of inflation. Real estate investing really helps you to hedge against the increases in inflation by you transferring the effect of inflation to your tenants. The third advantage of real estate investing is that you can borrow to finance your investment in real estate. Now, we all know how hard it is to borrow to start a business. Go to any financial institution and ask them for a loan for a startup business, and I can guarantee you very few are even going to look at you. Whereas you can actually borrow to finance acquisition of a property that you can start renting out in order for you to earn an income. Real estate investing is the only investment where you can actually borrow to start investing. You cannot do the same for the stock market. There are very few times when you can actually go and borrow to invest on the stock market, and most of the times you borrow from investment firms and not financial institutions if you want to invest on the stock market, and that is very rare, and I doubt it even exists in Zambia. So real estate offers you an advantage in that you can get a mortgage from a financial institution that can help you to start building your investment portfolio, especially if you've got a small amount of savings that you can put down as you get started building that portfolio. So now that you understand why real estate is a good investment, let's look at how you can get started investing in real estate. For starters, you need to choose a strategy. It's very important that you spend as much time as possible studying all the strategies that are there in real estate investing. Now, there are numerous strategies, but I'm going to look at the key ones. The first one is buy, renovate, and sell. So this is where you buy a property for a price which is below its market value, add value to that property, and then sell it for a price which is above the cost that you incurred when buying that property, and that results in a profit. The second strategy is buy and rent. This is where you buy a property and renovate it and then rent it out. Under this category comes such initiatives as student accommodations or boarding houses. So you can use your rental unit to create student accommodation or boarding houses and make much more money than you would if you focused on a single family family household. So in fact, student accommodation and boarding houses are also a strategy. The other strategies that you can look at are investing in high density areas of low income households. And finally, you can take a look at investing in commercial property. These are some of the strategies that you can take a look at as you are starting to invest in real estate. It's very important that you do a thorough research and understand all the strategies and pick one that matches your desired goal or what you want to achieve at the end of the day. The second thing that you need to consider is choosing a good location. Location is extremely important in real estate investing. Location determines the profitability of your property, its appreciation potential, the rates that you can charge for the housing units that you intend to rent out if you are renting, and most importantly, demand for your housing units. It's very important that you choose a good location. Again, you will need to do extensive research to ensure that you choose the best location that is profitable and can earn you the income that you need. Now, after you choose the location, you need to look for people that are willing to sell property in your desired location. This can be really hard as you are starting out. And so I encourage you to be on the ground, maybe walk around in your desired investment location, and also work with real estate agents, because these are on the ground and have an ear to the ground all the time in terms of what properties are on sale, which sellers are distressed and would want to get rid of their property as quickly as possible, or which sellers are in need of cash flow and would want to sell their property. The fourth thing that you need to consider is how you are going to finance investment in this property. There are two ways you can finance your investment in real estate. The first one is using your savings. Remember, if you've got savings that you don't want to keep at the bank, investing in real estate is a good option. And so you can start by using the fund that you've kept aside for your savings to start investing in real estate. The second way you can finance your real estate investment is by taking a mortgage from a financial institution or any other organization that gives mortgages. Now, we have quite a number in our country, and so you need to do, again, extensive research to find out what kind of mortgages you can get to finance building your real estate portfolio. You need to be really cautious when it comes to borrowing. Do your math in terms of how much you are going to be expected to pay in interest rates and other costs. You need to really understand the cost of that mortgage and how long you need to repay it back. Very important, because it's going to affect the cash flow from your real estate investment. Finally, run your numbers before you can buy that property. Will investing in this particular property leave you with a profit or income after you cover all your expenses? Don't forget to take into account expenses such as land rates. And in fact, land rates differ depending on the location you want to invest in. So you need to know what land rates you're going to be paying for a specific location. Also, don't forget the taxes. In Zambia, since January 2022, we've got two taxes that you need to be aware of when it comes to real estate investing. If your turnover or your rental income is below 800,000, you're expected to pay 4% on your rental income. If your rental income is above 800,000, you're expected to pay a standard corporate rate of 30% on your rental income every year. You also need to take into account the maintenance costs that you incur in managing your property. And so, if you determine that your income is going to be 10,000 a month for a rental unit, if your expenses come to 8,000 a month, that leaves you with a 2,000 extra income or profit. If you've got 3 housing units of such a kind, then you are making 6,000 profit. This is where you want to be. You want to be ensuring that your income exceeds your expenses. So it's very important that you do thorough mathematics in terms of how much you are expected to make, your expenses, and the profit that you'll be making on that property before you buy it. Now, real estate investing can be lucrative, but it's also got risks. So let's take a look at some of the risks that you need to be aware of. One of the risks is negative cash flow. I'm just from speaking to you about you doing your math in terms of whether that property that you want to buy is profitable. So a key risk is negative cash flow. This happens when your income is below the expenses, meaning that you've got more expenses than your income, and as a result, you are having a negative cash flow or you are making a loss. You don't want to be in that situation. Some of the top reasons why your cash flow could be negative is because of high vacancy rates, too much maintenance costs, not charging enough for your rental units, or not selecting the best investment strategy. So you need to take your time to accurately determine realistically your expected income income and expenses and profits before you buy that property. Please do that. I'm repeating this again. Now, you need to fill those housing units with tenants. However, sometimes it doesn't happen like that, which brings us to the second risk when it comes to real estate investing, and that is high vacancy rates. Unfortunately, there will always be this risk of high vacancy rates, but there are some things that you can do to ensure that you are not exposed to these high vacancy rates for your rental property. And one of the first things you need to do is when you are choosing the location. That is why location is extremely important. You need to choose a location which is highly demanded. When your location is in high demand, we expect that you have very low vacancy rates. Also look at the pricing. You need to look at how other units are priced in that location that you want to invest in. Make sure that your prices are not too high above the market price. Advertise your property. Nowadays we've got so many social media platforms where you can advertise your property. You could also work with real estate agents to ensure that your property is always advertised, and work with lease agreements. In the lease agreement, determine a notice period that the tenant needs to give you. When a tenant gives you a notice period, immediately start looking for another tenant to come in. Do not wait for that tenant to leave your property and then you start looking for someone else to come in. Immediately notice is given to you, start looking for someone else to come into that property. A very important point also is your reputation. You need to make sure that you've got a good reputation on the market. Now, I've seen some comments on some social media platforms where houses are advertised of landlords who people give a warning against, and so you don't want to be in that situation. You need to make sure that you've got a good reputation so that tenants would want to work with you. The final risk that I would like us to look at is problem tenants. Now, problem tenants are something that you really need to be careful about, because some of these problem tenants don't want to pay the rent, or they don't want to pay on time. They don't know how to maintain your property. The only way you can get around this challenge is by ensuring you do a screening of the tenants that are going to occupy your property. Check with the previous landlords as well. What kind of a tenant was this? I know this is really hard to do, but start doing some kind of tenant screening so that you really focus on those good tenants that won't give you a headache, because this problem can be much worse than you actually think. Well, that's all I had to share in today's video, and I do hope you and I are going to start investing in real estate this year, because I am going to start this year. And follow me as I'm going to give you updates on how I'm performing in building my investment portfolio. If you've got any questions, please leave them in the comment section below. And for those that are already investing in property, please let us know how your experience is. My next video is going to look at investing on the stock market. Do subscribe to my channel and smash the like button. See you next time.